Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Having looked at this, now the challenge we have is that one is the reciprocal of the other. So I'm going to assume, as I did with the yen, that you're focusing a little more on the spot pair as the asset benchmark. No disrespect to ISE, but that's probably what you're going to look at more, and obviously you can look at both and see how they reflect. So if we're looking at this pair, we might be looking at this and thinking that our risk here is a falling euro, i.e. rising dollar. Falling euro would be rising dollar. So here we have a different exposure. Before we were concerned about a dollar rally, and here we're also concerned about a dollar rally, but it expresses differently because of the nature of the price expressions. Now, what we need to do is, in looking at the chart, I just picked a number. I'm saying, let's say, again, for the example, let's say we see this as a possible topping out, and if the euro starts to break under this 138 level, and that's where my horizontal is, it's right about 138, so you can get a little bit of a view of that. That's a little bit of a distribution pattern, and maybe if we start to break that 138, there's more to come. We've also already broken the moving average here already. We see that. Now, one of the things we might want to do is we might want to say, well, what price does that interpret to for the ISE? So what I did here in this workspace is I actually embedded a little Excel sheet into this workspace. And you can do this in TradeStation. If you're not aware of this, it's one of those hidden gems in TradeStation that you can embed a Microsoft Office window within a TradeStation workspace.
That's
Most
great.
of the time, that's either going to be a Word if you need to make notes to yourself, or ideally an Excel sheet. It's a great convenience because it is saved and opens up with your work. When you open up this grouping, we call it a workspace. Some people call it a layout in some platforms. It'll open up with it. So what I did is I built a little converter in here. And I said, well, if my concern is 138, and I type in 138, it'll give me the equivalent. So now I know what it is that I'm looking at here expressed in the other terms. This little converter will work both ways. So if I put in a 73, it'll give me the equivalent to what the 73 is. So it's really, you can obviously do this in Excel outside, but I did this right in the workspace, so it would be very convenient. Let me go back to that 138 and put that in, and we get a 72.46 and some other decimals. If you're interested in the formula, when I click on it, here's my Excel formula bar, if you can follow my pointer. We really do embed an Excel sheet in the workspace, and we give you the Excel toolbars with it. So I do that for this kind of work. I also use it for certain other technical analysis formulas. It's very convenient. And again, it's just a reciprocal, 1 divided by the cell value that I put in.
Hey, Stan?
Yes.
Question. One of the attendees is asking, will these can you get a live feed on this or no, on your spreadsheet?
There are some ways to do that, to pump data out. There's no default connect. You can't click and have it happen.
Okay.
There are some samples of easy language on our site and ways to do things like that. There may be ones on our site that are close enough to what you want so you don't have to customize. Otherwise, you would have to do a little fudging with some easy language to do something like that.
Thank you.
Let's go back now. So I wanted to show you this equivalence, and the reason I put these others in here I'll leave the euro-US dollar, the spot pair down here, and I'll return to TradeStation. Let me bring up that option station analysis window. This is the same type of window we looked at earlier for the yen. Again, I'll push the font a little bit. And you'll see the strikes are in the middle. Again, I just opened up the Julys. Here are the strike prices. And the reason I put this in here is because I set up the conversion for the strikes. So that when I look at this and I say, well, I don't even know where I'm starting perhaps, because maybe I'm used to spot pairs or I'm used to some other, expression, and I want to see what these are. Well, I just put the conversion up there so you can see it right away. This one that with the red font I did, the red draws your eye, so that's the one you type into for converting any number you might be looking at. Try and move this out of the way a little bit. Okay. Well, here, now Steve pointed this out before I got started, and here is the classic example of, do I need a call or a put? Which way am I concerned about? And here what we were saying is that I'm concerned about, if we look at the chart, I'm concerned about a euro sell-off, i.e. a dollar rally. Now the numbers work as reciprocal. So here what I'm going to have to do again is look at the call. So even though I'm looking at the euro selling off, because here I'm trading the dollar, I need to look at buying the calls. And you'll notice, by the way, if you look at my little cheat sheet on numbers here, you'll see how, well, it should be obvious. It's the reciprocal, folks. 70, 143, 73.5, 136. It's reciprocal, so the rally in one is the sell-off in the other. And that's where, I plugged in buying one call. I said, well, if I plug in a 138, it gives me a 72.46. Well, that's closest to the 72.5. Obviously, you might work with different strikes, but I'm just trying to get a point across about looking for price levels and also reevaluating or calculating the strikes. So I have a 72.5 is close to that level. That's critical for me. So maybe I want to look at the 72.5 call option. I'll take that 72.5. And again, I plugged it in as a one-lot position. I created another position chart out of it so you can look at it, but it's just a straight long call. I didn't do anything fancy here. The blue line is today, and the green line, of course, you'll recognize is expiration. In the other position chart, we had 4 plots representing different dates, and actually in any of these charts, you can have as many as 100 plots. I know my eyes aren't that good, and I think after I get to about 4 or 6 of them, I don't really see very well, but you could have 100 different plot lines in here, and each line is a different scenario of price, time, volatility versus the Greeks or the P&L value. So that last, just to reiterate that last point that we were making here, is that I don't know if I should use the word inversion because it's not an inversion, it's a reciprocal, I guess, but that inversion of the pricing, to remember that on this scenario, let me come back for a second, stay with me a minute. In this scenario, I was looking for, or I'm concerned about, at risk of a rally, so I bought calls. Remember, this is the spot pair. And in this case, I have the spot pair in the other section. I have a spot pair down here. I'm looking for a sell-off, but I'm still buying the calls to hedge that risk or to protect me against that because of the reciprocal expression in the prices.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.